Hi, I'm Ron Ianieri of the Investitute, and I'd like to welcome you to another one of Ron's rants. Well, this rant is going to be a little different because in this rant, I am actually going to give you the stock I think, at least of the universe that I watch, the stock that I think is going to be stock of the year for 2017. And I'm going to go against a lot of common thought on this. I'm going to pick Chipotle. I think CMG is going to be the 2017 stock of the year. And let me tell you why. Today, CMG came out with earnings. And just so you know, I had said that I thought this was going to be my stock of the year back in late December between Christmas and New Year's. I said it again right after New Year's. I'm sticking to my guns, but it might be a real good time to get into this thing. About a year ago, obviously, that you probably have heard about the problems they had with the food poisoning. The stock got clobbered. It was a $700+ stock, got knocked all the way down to $400. It was just recently today at $423 on the close the day before. Earnings came out. Supposedly they missed by a cent, but I saw another service say that they beat by a cent. And the stock actually opened up today. It opened up at $431, up $8, traded up to $434.5, which means it was up over 11 at the time. And it did it instantly. And then within 5 minutes, the stock started trading down. And next thing you know, it's down around 403, which I told everybody today is an entry point. I think anywhere around that 400 level, I don't know how close we'll get to, but you've got the 100-day moving average right there at 400. You've got the 50-day moving average just below it. And the stock obviously got clobbered almost $20 today. So I'm picking that as my stock of the year and have picked it for my stock of the year. What I think has happened is that the information that came out today was misinterpreted. And this is something that does happen, and this is why it's Ron's rant. When the stock opened up this morning, CNBC had coverage on it from the get-go. And one of the things they did was they brought an analyst on to talk about what I believe and everybody else believes is the real important thing with CMG, which is its same-store comparable sales. And the argument brought forth by this analyst is that when you're looking at comparable sales, you've got to look at the same month the year before, which I'm in total agreement with. However, now that we are officially 1 year beyond the event, when we look 1 year ago from January's numbers and December's numbers, and they were both up double digits. January was up 24.5%. Prior to that, December had been up 14.5%. Numbers that I like to see, that improving number. But the analyst came out with this. This is what he said. He said that those two numbers aren't as impressive because they're being compared to a year ago's numbers after the event had happened and the sales had already gotten whacked. He's saying that we were comparing to such a low number because it was after the event that it's not really a fair judgment because all the prior numbers were being compared to the year prior before the event occurred. So what he's saying is we're now comparing same-store sales against same-store sales after the event occurred. And they were so low that it's easy to see improvement. But what we should be looking at is the fact that prior to that, when the sales were so much higher, we're still nowhere near getting back to where we were. Now, right off the bat, it's been 13 months. Kramer says this whole event has in the past, with both Jack in the Box and Taco Bell. And one of those, I think it was Taco Bell, or was it Jack in the Box? Whichever, one of them had deaths involved. And it still took them 18 months to come back from. So regardless of the fact that CMG still has 5 more months of time to improve, the fact of the matter is, I think a lot of that sell-off that occurred was what the analyst said, which wasn't incorrect mathematically. It was incorrect through his interpretation. I am not trying to compare Chipotle's current sales with their sales from a year and a half ago prior to the event. I can't compare them. They're non-comparable. But remember, Chipotle was not a $400 stock at that time. It was a $750 stock. What I'm trying to do is I'm trying to look at whether Chipotle is recovering from the event, not whether it's gotten back to where it used to be yet. I don't need an analyst, and in this case, this guy's case, an analyst, to sit there and try to tell me that Chipotle's not doing well because it doesn't compare to its earnings prior to the event when the stock was at $750, when they were upgrading it. What I want to see is after the event, when the stock came down to the 350, 400 range, are we improving since then? Because that's where the stock is now. I want to know when they had the worst of the worst of the worst news about the E. coli, when they had the worst earnings and the worst effect from it, are they coming back from that? Because I don't care where Chipotle's earnings were and where the stock was when it was at $750, because that doesn't help me. What I do care about is where the stock is now, where the earnings are now, and where the thing is heading from here. This analyst, with his information, is going to lead you and others to be a seller down here at 400, when it's obvious that they are coming off their bottom. Now, can they ever get back to the earnings they had? I don't know. Maybe, maybe not. Jack in the Box and Taco Bell did. It took a few years, but they did get there. Can that make Chipotle a $750 stock again? I don't know. Possibly. Jack in the Box and Taco Bell got back up to their highs, so it is possible. But I don't want to sit there and have an analyst severely taint the information to me. Now, fortunately, I know better. But the problem's going to be a heck of a lot of individual investors like yourselves are going to listen to what this guy says. It makes mathematical sense. It's the interpretation that's incorrect. I know CMG is not making what they made prior to the incident, but I don't care about that. What I care about is since the incident, are they improving? If I sit and wait until they get their earnings back up to what they used to be before I buy CMG, I'm going to be buying CMG at $750 again. One of the things that they always say in the market is when you see retail coming in heavy, you know you're at a market top. And when you see retail leaving the market, you know you're at a market bottom. And it's because Wall Street has perverted probably the most important cliche that there is in the market. And Wall Street makes you buy high and sell low. They do it all the time. And they're doing it here again with Chipotle. And do I think he's doing it on purpose? I don't know. It's possible. It has happened before. So here you are at 750, reading all these buy recommendations, and you buy it at 750. The stock gets clobbered on this news, comes down to 400, and now you're getting the sell recommendations. So you're buying it at 750, you're selling it to 400. And do you know who you're buying from and selling to? Wall Street, because they are practicing buy low, sell high. And they're doing it off of you. It was so funny. Myself and a whole mess of subscribers of mine, we were watching CMG right before Ackman bought in. And it was amazing how two different analysts came out downgrading the stock, giving the dumbest of all excuses ever for why you should sell the stock here. The one guy, the one analyst from a firm that Ackman actually uses. I'm not saying there's any connection there because I don't know. It might not have anything to do with anything. But this analyst said it's very unlikely that CMG will have its earnings return to where they used to be at their highs in the next couple of years. Therefore, I wouldn't buy CMG down here at 400. Well, hey, dummy, you're not going to get a shot to buy it at 400 if the earnings return back to their highs. The stock's going to go back to its highs. This is when you want to buy. You want to buy when it is low, when it is under stress and duress. You don't want to buy a stock that's a business plan, meaning it doesn't have any earnings, and they're hoping for this one big drug that might get passed. We don't want to buy business plans long term. We want to buy businesses. CMG is a business. Today, right now, it has positive earnings. And it's had positive earnings for each of its last 2 or 3 quarters. They're not like they used to be when the stock was at its high. But the stock's not at its high. It's half of that. And there is definite evidence that the stock is starting to rebound. The company and the stock on the charts, both starting to rebound. Is it early? Sure, Jim Cramer says it is early. And I took a look at what he said, and he was correct about Jack in the Box and Taco Bell. It was about 18 months or so. So CMG is already starting to show its sign of life, of a retraceal back to its glory days. They actually opened 75 new stores this last quarter and only missed their earnings number, their upper line number by 1 penny. Their sales have consistently, progressively improved over the last 4 months. They are now doing better than they had done at the worst of the bad days. That's what you want to get. We know there's a lot of upside potential because they've been there before. They're growing again. They've got a guy like Ackman behind him, an activist investor who has demanded and received change. There's a new thing, this digital ordering thing, which is supposed to be cutting edge that's going to help. Yeah, okay, so avocado prices are going up. And right now, because they're trying to win back their customers, and that is the key, winning back your old customers, they're not passing that price increase on. Something that they would probably do in the future, but they're just not doing it now because they're trying to get the customers back. And they still only missed by 1 penny. CMG is my stock of the year. I hear a lot of guys, talking heads, Wall Street types, talking bad about it. And that's why I want to be a buyer. Because these guys make their living off of getting people like you to buy high and sell low. How do they do that? They upgrade stocks when they're 700, and then 3 months later when they're 400, they downgrade them. You see it all the time. And you always ask yourself, where the hell was that guy back when the stock was 1,000? Why did he tell me to sell it then? Why is he now telling me that it's 200 to sell it? That's what's happening. So I'm going out on a limb here. I'm a stock replacement guy using out month deep in the money, 80 to 85 delta options instead of the stock. I will roll those long calls as the stock goes up. I will sell premium, as I do in my upcoming Phoenix portfolio newsletter. So I'm going to stick by my guns and stick by my word. But this is why I like CMG. And this is why I think it's going to be stock of the year. Because once the recovery gets rolling, there's not going to be any sellers. Wall Street's going to be holding and let it get high enough to convince you to buy more so they can sell it to you again and make all their money. Don't be that person that buys at the high and sells at the low. Buy low, sell high. That's the saying. Don't be on the other side of Wall Street using that against you. And that is basically my rant. Wall Street is not your friend. They are your competitor. And they are using you to make money. Here in CMG, let's not let them. Let's let them talk all the bad stuff. Let's not be the seller down here. Let's be the buyer, especially when the company is starting to turn the corner. About time Wall Street learned a lesson that we're not all Muppets, as the Goldman Sachs executive used the term on us. Muppets. Don't be a Muppet. Buy low. Sell high. So I want to thank you for your time. This is Ron Ianieri of the Investitute with another one of Ron's rants with his pick for stock of the year for 2017, Chipotle CMG.